IT higher despite the rupee appreciation or the rupee strength, which is typically negative for the IT companies. But let's talk about the newsmakers of the day, and that's the HDFC Twins. In fact, they started their up move in yesterday's trade in the second half of the trading session, particularly in the last 1 hour. We saw a big pop on these names, and they've continued with the big move, 6.5% gains. CNBC-TV18 learns that the MSCI inclusion overhang on HDFC Bank may lift. Vivek Iyer is joining in with the details.
Well, that's right. In what was perceived to be quite a bit of a technical overhang as far as, the merger was concerned. And what we're talking about here is actually the treatment that passive indices would give this particular merger. So HDFC Ltd and HDFC Bank merger, there was worries about how exactly, a big tracking fund like MSCI would actually treat both of these stocks. So the worry was that, there could be the possibility that, the names would be removed from the index, and post which, once the merger was completed, depending on the foreign headroom available, and then they would be put back into the MSCI index. But now, what's actually happened is that MSCI itself has come out with a circular today, and they've updated new rules to handle corporate events like M&A, which, fits the bill as far as the HDFC Bank merger is concerned. So two things have happened. Number one, the first thing that they've said is they'll immediately consider HDFC Bank as part of the combined entity. And the second thing is that, the foreign room or the foreign headroom clause which was there, that also has been eased. So analysts are now estimating, quant analysts are estimating that the weightage of HDFC in the MSCI index could actually double. And this is something that has led, number one, to analysts believing a significant amount of inflows could come into both of these stocks. And also the entire sell-off that could have happened earlier is now no longer there.
All right, Vivek, take that point. In fact, HDFC Bank has been an underperformer as compared to the Nifty over the last 2 calendar years. This year as well, it was on track to do that. How does it end this year will be extremely crucial to watch. We do have with us Sriram Velayudhan, who is the Vice President Alternative Research at IIFL Securities, joining us to discuss more on this. Sriram, as per your initial calculations, if the weight was to double, how much would that mean in terms of incremental flows coming into HDFC Bank? And do you think that, with this, the outperformance or the underperformance of HDFC Bank will get undone?
Hi, good afternoon. So as Vivek pointed out, in one of the important amendments that the index provider did to the methodology document, one of the conditions in case of companies undergoing mergers was there was a requirement in relation to minimum foreign room. Now, as per the updated methodology, the minimum foreign room requirement of 15%. So what the methodology states is, for new constituents, there has to be a minimum foreign room of 15% available for retaining or for inclusion. Now, this requirement is totally taken out. Correct. So that removes a major overhang in terms of a new stock getting retained or getting considered for inclusion in the index. Right. So the immediate overhang is now behind us in case of these names, but still there is some clarity which is required in perspective of what will be the adjustment factor that will be applied for such constituents. Let's say as a process of continuity, if the stock is retained and if the room is greater than 15 and 25, there will be an adjustment factor of 1 that will be applied. And if it dips below 15 and if it's greater than 7.5, adjustment factor of half will be applied. In case of half, the flows will be largely neutral. If in case the adjustment factor ends up being 1, we can end up seeing a decent amount of inflows in the name, almost to the tune of 2.5 billion odd. But still, we need clarity how the treatment would be. But definitely, as you rightly pointed out, the uncertainty and overhang is behind us now.
Sriram, a very basic question. How do they decide this adjustment factor? Because that will determine the inflows, right? At 0.5% adjustment factor, the inflows will be neutral. At 1%, at 1x, you're saying the inflows could be $2.5 billion. How is this decided?
So, Reema, this is purely based on the quantitative framework which the index provider has laid out. So the basic objective of this index, right, is to present a tradable basket of stocks for the foreign investors. This is purely based on the methodology document. This has been the framework over the years.
When will we know what the adjustment factor is?
For that, we will have to wait for some more time, because largely what happens with the global indices is, in case of mergers, the adjustment happens a day prior to the X day. So there isn't still clarity. There is no clarity as such when will the adjustment happen. But largely, going by the rule book, we expect it to happen towards the closure of this event. Though it's better if we wait for clarity, because this is a new amendment.
No, absolutely. The market, though, is not waiting for that clarity, Sriram, is it? How would you read the 6% move? It's very large for these kind of names.
Yes, right, Prashant. So what has happened is, after this amendment, the overhang is now behind us. Because if the stocks would have got removed from the index, that would have led not only to outflows, maybe it would have been out of a very prominent benchmark as well.
Right.
But as I said, now that the overhang is behind us, market is definitely cheering
All right, we take that.
amendment.
Yes, we take that point. And, you know, since you're with us, another stock which is in focus, and this one is Indian Hotels. It will be included. This list has come in the MSCI India Standard Index effective December 1st. Analysts were expecting about $200 million worth inflows on account of this. What explains the kind of decline that we're seeing? The numbers, there was nothing wrong in that. I mean, does it have anything to do with any sort of announcement with regards to MSCI?
The stock has done up its course. In fact, I will refrain from making any stock-specific comments. Maybe the rationale would be like, the funds that would have prepositioned are using this opportunity to book profits.
Sriram, thank you very much for joining in, and have a great weekend. Prakash Diwan is also joining us on the show now to talk about the markets, what we've seen so far. Prakash, you've liked HDFC Bank, right? It's a bit of a gamble, right? We don't know what MSCI is going to decide as the adjustment factor. But at current levels, would you buy HDFC Bank or Limited?
Good afternoon, Reema. So, the MSCI thing was just a trigger for people who probably always thought HDFC Bank and HDFC Limited and the combined entity would offer value, but there was so much of erosion in terms of positions, and there was so much of dilution in anticipation of one of them giving way to the weightages on the way out. Right? So that was something which people had factored in. But remember, this whole merger process is going to actually fructify sometime in April of next year. So you still have about 5.5, 6 months to go, which means that fundamentals will become center stage, will dominate the narrative rather than just a technical, flow-based buying or selling. And the money that's coming in, mind you, is more ETF money, and that's exactly why weightages have been so important. But I think over a period of time, over the next week or so, people will kind of, market would have digested this change in weightages as and when it happens, and then start deferring it as a trigger. But the fundamentals will come center stage. And what numbers HDFC Limited gave out just a couple of days back tell you that, once the combined entity starts performing, you'll have comments like who says the elephant can't dance, and all of that will start bringing out the salience of this JV. So my sense is more from a fundamental perspective, it offers tremendous risk reward. Whether to buy it today or not is your decision, but I would be a bit patient and wait for a lighter day. Today is too much of exuberance. 5 stocks, rallying the Nifty to all-time highs, towards all-time highs or 52-week highs. But I would definitely wait for a softer opportunity to buy into this.
Prakash, got many more questions for you, but need to slip into a very short break. We'll come back in just a jiffy.